We've upgraded South32 back to an ad recommendation this week and added it to our high conviction buy list with a $3.09 valuation. In our view, there's three easy arguments as to why South32 should be in our high conviction list. Point number one is the strength of its cash flow performance. The company is now generating an equivalent of just over 10% of its market cap per year in free cash flow on improving commodity prices that have really benefited the whole sector. But given the company's exceptional leverage, it's really coming through in South32's cash flow performance. So with that, it's now producing more than in excess of US $1 billion per year in free cash flow, and that puts it on a free cash flow yield of around 11%. Which is quite unique in the sector, even on some of the increases in commodities we've seen. Point number two is the simple fact that when South32 was spun off from BHP, it was quite a weak market for the sector, and to really help compensate for that and the difficult market exposure South32 inherited, its parent did give it what was an oversized or stronger balance sheet than really the gearing that the whole group had when it was a whole. So with that and the cash flow performance, South32 has managed to get itself into a net cash position now with more than US $500 million in net cash on the balance sheet, which also is quite unique across most of the big miners in terms of debt level. And finally, we'd have to say that, that both the cash flow performance and the balance sheet combined to put South32 in quite a unique position to exploit the turn in cycle that we're now seeing coming through. Even though we're at just an early stage in that recovery for the materials sector, we are confident that we're now seeing stabilisation of commodity prices, and which will lead to an upgrade cycle that is now, in our view, unfolding over the last 6 months, and really we see potential for it to continue over the next few years. So with its balance sheet strength, cash flow coming in, there is quite an arsenal for South32 to aggressively pursue inorganic and organic growth opportunities, which really is quite unique for not just a company of its size, but really any of the major players in this space, where a lot of them are still weighed down by debt from the previous cycle. So with that, we're more than happy to put South32 on our high conviction list and see now as an opportune time for investors to add it to their portfolios.